Welcome. Today, we're diving into a really fascinating and often misunderstood part of tax law, the exemption for political parties under Section 12 of the new Income Tax Act 2025. Let's get right into it. So, here's a question we hear all the time, right? Both from clients and just in general conversation. Do political parties, the ones making our country's policies, do they actually pay income tax? Well, as you're about to see, the answer isn't a simple yes or no. In this explainer, we're going to break it all down. We'll start with the court legal provision, then we'll unpack the super strict conditions attached to it. We'll walk through a practical example, cover compliance, and then wrap up with the key takeaways every tax professional really needs to know. Okay, first things first, let's set the stage. Political parties operate in a pretty unique financial world, and if you're advising them, understanding their tax obligations is absolutely critical. You see, a party's tax exemption isn't just a given. It has to be earned. The entire framework really hinges on one specific section of the new act, and it only grants this benefit if a very, very strict set of rules is followed to the letter. So let's get straight to the heart of it. Section 12. This single provision is the key, the absolute key to the entire tax exemption for political parties. So what Section 12 does is it allows certain types of income. We're talking income from house property, capital gains, other sources, and of course, voluntary contributions to be excluded from a party's total taxable income. But, and this is the big catch, this benefit is not automatic. It's completely dependent on fulfilling every single condition laid out in Schedule 8. Okay, so what are these conditions? They're all in Schedule 8, and I want you to think of them as 6 mandatory pillars of compliance. If even one of these pillars crumbles, the whole tax exemption comes crashing down for that year. This level of strictness, it's really designed to bring more transparency and accountability to political funding. And just look at how thorough these conditions are. Parties have to maintain proper books, they have to keep detailed donor records for any contribution over 20,000 rupees, get a mandatory audit, stick to a strict cash donation limit, file a separate contribution report, and finally, file their tax return on time. All 6, totally non-negotiable. Let's really focus on that cash limit for a second. 2,000 rupees. That is it. Any amount larger than this must be received through a verifiable channel. Think an account payee check, a bank draft, an electronic clearing system, or, of course, through electoral bonds. This is a hard and fast rule. 0 exceptions. Next up is the 20,000 rupee threshold. For any contribution that crosses this line, the party has to record the donor's full name and address. The whole goal here is transparency, but what's really interesting is the key exception. This specific record-keeping rule does not apply to contributions they receive through electoral bonds. Okay, theory is one thing, but how does this actually play out in the real world? Let's use a practical illustration to see the massive difference between getting it right and getting it wrong. So let's invent a political party for a moment. We'll call them the New Vision Party. And let's say they've had a great year. They've got income from property, some investments, and plenty of voluntary contributions from their supporters. And this just perfectly illustrates the stakes. In scenario A, the New Vision Party is flawless. They follow all 6 conditions perfectly. The result? 100% of their eligible income is completely exempt from tax. Beautiful. But now look at scenario B. They make one tiny mistake. Someone in the back office accepts the 5,000 rupee donation in cash. By violating just that one condition, the exemption under Section 12 is gone. Poof! Every single rupee of their income for that entire year now becomes taxable. So, this brings us to probably the most practical part of our discussion, especially for all the professionals watching. How do you actually ensure compliance and avoid these incredibly costly mistakes? All right, so how do you make sure you stay compliant? It all comes down to having a solid process. First, meticulous bookkeeping is your foundation. Second, you need a bulletproof system to track every single donation over that 20,000 rupee limit. Third, you enforce a strict no exceptions policy on the 2,000 rupee cash rule. Fourth, schedule that audit way in advance so you're not scrambling at the last minute. And finally, get those deadlines for the contribution report and the ITR marked in red on the calendar. Now, let's talk about the common mistakes, the landmines that can lead to total disaster. Anonymous cash donations over the limit? That's an obvious red flag. Incomplete donor records? Just as bad. And missing filing deadlines? Well, that's just the ultimate unforced error that will guarantee you lose the exemption.
All right, let's boil all of this down to the key takeaways. These are the absolute must-knows if you're advising any political entity.
Here is your final checklist. Number 1, the exemption is conditional, never, ever automatic. 2, the law is Section 12 read together with Schedule 8. 3, that 2,000 rupee cash limit is absolute. 4, the 20,000 rupee documentation rule is non-negotiable. And most importantly, 5, a single failure means total failure. The entire year's income becomes taxable.
At the end of the day, you have to remember that for political parties, the path to tax exemption is paved with meticulous compliance. A single misstep isn't just a minor problem, it's a trigger that can lead to a huge and frankly entirely avoidable tax bill for the entire year. Thank you for watching. If you found this explainer helpful, please do like, subscribe, and share it with others in your professional network.
This video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated educational video.